Welcome back, everybody, to 25 Invested. This is my TFSA account. I am currently up 7% all time. On the weekly, we are basically flat. Almost no movement. I'm down about $100. Really, most of the damage was done last week, and actually I think that we could have been down a lot more, but I did get some dividend payments, and actually some quite sizable ones, so we will be going over those on Monday because that will be the dividend portfolio Monday. So I have quite a few videos coming out, and we're going to start with the tax-free savings account because it is the biggest account. I still have $8,800 on the side. That hasn't changed, and we are going to see some funny numbers here. Am I worried about any of the stocks on my portfolio? No, I am not. Even though we will see some quite fun numbers. Apple, I'm still up 18%. Algonquin, I am down damn near 50%. I'm 49.93. On my 87 shares, I am down. I am down almost exactly half of my money, which is, it's what you expect from a company with high debt. And they're not doing very well right now. So that is a company that is struggling right now, and it is struggling in my portfolio. So, I mean, enough said. Having lots of debt during high interest rates is not the greatest. Alibaba, down 21%. This is just a play on, how bad can China mess with my portfolio. I do not have very much in it. Same with Algonquin. Algonquin's 1,200. Alibaba's about 1,100. Almost the exact same, or 1,200, I guess, too. So both positions are at about $1,200. Really not worried. Very small portions of my portfolio, as they should be, as everything should be. So BlackRock, I am still up 3%. I actually got dividends from BlackRock, about $54 for my 8 shares, which is pretty cool. BlackRock, I do have $5,171 in. I'm up $171. So actually, I'm almost bought exactly $5,000 worth of BlackRock for 8 shares, and that is in American. So very cool. BlackRock up 3%. Sweet. That is just long holds. They're all long holds. This is the basis of the portfolio, is to buy something and hold it basically forever. Brookfield Corp, much like BlackRock, is an asset management company that holds alternative assets. So things like real estate, industrial, bunch of they're actually quite a confusing business. They have an insurance sector that is doing very well, and for some reason is at a severe discount to its net asset value, which is why I bought it. And I do believe that because they took off the assets that they did off their balance sheet, that people aren't expecting those as profits. So we will see how that plays out. Brookfield, that is a bit of a stranger play. I do like the corporate. I do like the company anyways, just based on BAM, which is what I was going to buy, and Brookfield Corp owns 75% of BAM shares. So we'd just rather buy Brookfield. And, I do like insurance companies, asset management companies, as we'll see. BN, BlackRock, and Berkshire Hathaway are becoming quite large portions of my portfolio. So you do see a bit of a bias towards those. Bank of Nova Scotia, down 7.7%. I bought this at, I guess, an all-time low back when I did. So they did just drop through my low, which is pretty cool. I bought about $66. I'm again not worried about the big Canadian banks. Bank of Nova Scotia does have more investments in China than I care to admit. Plus, every single big bank is going to be fighting with the housing sector right now. So until I see less people having negative amortization in Canada, that's when I expect to see a turnaround in Bank of Nova Scotia. So not a lot to say there, but quite a lot to say there. We'll see. Again, $2,000 in my portfolio. Not that much. Brookfield down 12%, about 4,000, so twice as much. Again, not that much. Berkshire Hathaway, again, I'm still up 26% on this position, and I'd really love to buy it. I'm thinking 310 about 300, 310. Last time I bought it at 275, but I didn't have quite as much money as I do have in the account now. So I would like to double my position, probably 20 to 25 shares of Berkshire Hathaway at $300. So, and when that happens, I will likely also be putting my money into XEQT at the same time. So when Berkshire Hathaway hits my buy price, I will also be putting in the other probably $3,000 to $4,000 into XEQT. So we will wait for that. But again, I'm not in any rush. It also is, 13% of my portfolio, which is a lot in cash, but it's not too much in cash. Caterpillar, I'm still up 35%, one share. Kind of a shame. I was a sleeper on this one. I could have bought it at, I think, 180. So, it's worth kicking myself in the butt about, isn't it? Dollar General, I'm down 16%. High debt, much like Algonquin, but at, I believe, a better price. So we'll see Dollar General. We'll see how this plays out. I would really like them to, more or less pull a Walmart, but they do have substantial debt. So we will see what happens with Dollar General. 1,200, I guess 1,500 in that position. 1,400. So again, a sizable position, but not too big. Dream Industrial. Oh God, I was sleeping on this one. Down, I guess up 1.75%, but down from, I guess I was up about 15% on this position. So this has come down quite a bit. I like Dream. I like Dream Industrial. We'll have to assess this, make sure that they're still doing okay, making sure that they're still able to pay their dividends, and making sure that the people renting their properties are still, signing extended leases. So I want to make sure that people in my industrial properties are, they're signing leases for very long periods of time. So we'll take a look at Dream Industrial, make sure everything's happening all right, and then, come back to it. Dollarama, up 75%. This has officially taken back the most significant upside of stocks, even past Meta again, which is very cool. Very small portion of my portfolio. I'm so sad about that. Empire Co. I did double down on this. I am right back flat. It is giving me dividends. I am not touching it. I think that there's going to be better opportunities out there, and I do think that should be Berkshire Hathaway and XEQT, because I'm trying to take away from single stock picks and move towards my ETFs. So yeah. Google, I'm still up 12%, so not bad. This is actually one of my substantially bigger positions, $6,500 American, and I am up $740. I own Google. I like owning Google. So, I have nothing to worry about there. Home Depot, I'm down 1.52%. I'm down on the stock 1.52, but I also got dividends, so that was pretty nice. I do have $600 worth of Home Depot, and I would like to buy it at a cheaper PE. So, maybe you might see me average, like, buy one more share, but we'll see about that. Intel is in the positives. Intel is up 5.41%. Cool. I did not expect that. I thought that Intel had a rough week. Apparently they didn't. Yeah, I kind of knew they didn't have a rough week, but I'm still happy to see Intel doing okay. This is one that I did hit negative 50% on and then back up. Same with Meta, actually. So Intel and Meta are both in the positives now. I've seen both of these stocks at negative 45% at least in my portfolio. So, times they go up and down. The stock market goes up and down. So it's cool to be a part of volatility. It's also cool to hold through it. So very, very cool. Manulife Financial, I'm still up 9% on. I would like to buy more Manulife, but I won't be buying it when I'm 9% up. Especially for a dividend stock, I want to make sure I get the yield out of it. Manulife is not classically a growth company, and it always has a rough time breaking above 26 a share. So I bet you it did bounce off 26 too. Microsoft, I'm up about 20%, 19.72. Again, just like Home Depot, I own 2 shares of Microsoft. This was at the start of the AI bubble. Microsoft was having a bad time, and I did buy another share, and I believe I bought it when I was about 15-20% down, so not bad. Microsoft, good stuff. NEWT, not touching with the 10-foot pole. It's also only $1,000 in my portfolio. Nice, thank God. Thank God I didn't double down on this one. I really don't think that... I know they're trying to move to a holding company, and I love to see it, but I just see so much volatility, so much dilution, so many things that I don't want to see. You know what I mean? So we're just letting that guy sit there and rot. They also cut their dividend more than Algonquin Power, which is pretty substantial. Nexus REIT, 112 shares. Down 24%. They are having a hard time paying everybody, so the payout ratio is pretty high. They're also having a hard time with their industrial REIT, so I'm kind of staying away. I want to see how this plays out. I'll do more digging. Smart Center REITs, I'm not a huge fan of commercial real estate. I feel bad about buying this one, but now that it's here, I'm gonna live with it. So we'll take a look at that. We'll just chalk it up as not a mistake, but not something that I wanted to do. Well, it's something that I did, so it's something that I wanted to do at some point. It's just not something that I care for now. VIG down 2.28%. Just an ETF. Excellent. Walmart, I'm still up 20% on Walmart. I'd like to buy more, but I'm not going to buy it when I'm 20% up. And I don't think that Walmart has that much growth opportunity. You know, I think they have price control, but I could not imagine them just doubling how many Walmarts are open. So we will see about Walmart. It's doubtful. XEQT, you know how that goes. I did actually buy about $1,000 of XEQT, bringing me up to 542 shares, and I did so when XEQT was down. So I actually did hit negative, I think negative 2.5 to 3%. Nice. XEQT. Anyways, that's it for me today. Thank you guys for watching. I hope that, I hope you guys are enjoying the journey with me. Bye now.